Okay, the Dow was down 123 points, just over a quarter of a percent lower. On Friday, the S&P was up a quarter of a percent, up 15 points, moved right up to just under 6,100. We closed at 6,090, just directly under that 6,100 level after flirting with it. My guess is we're likely going to reach that level next week. The Nasdaq was up 0.81%. The Russell was up over 0.5%, and the VIX was down 5.69% on Friday. The VIX was down, still holding below the 200, the black line, and the 50, but the 50 is still above the 200. We are forming divergences on some indicators. Like I said, I think the S&P is going to pop above the 6,100 area, put in a peak, and then start to turn around the weekly trend line. One of the huge warning signs right now is the 50 is still above the 200 period here on the VIX daily chart. Again, when we've had that happen before, to other major sell-offs, the last major sell-offs we've had, 2022, 2020, that 50, the green line, got above the black line, the 200, and it stayed above there, and it led to these sharp declines. And again, we can go all the way back to 2007. So again, we've got that right now. That is very problematic for the market. We had a 3-week rally after that pullback from the election rally. We had a rally with the election, we pulled back, and then we now had a 3-week rally. I told you I was looking for that 3 weeks ago when I talked to you about this chart showing the volatility oscillator. I told you I thought it was going to turn back down, not cross above the signal line, but turn back down, and the S&P would turn up, and that is what has happened. We'd reach that mid 6,000 area, overthrow it, and go to the 6,100. We reached just under 6,100 there on Friday. So again, I think that this is going to complete either next week or the week of the Fed. I think it will complete very, very soon, reach the 6,100 level, and then turn off of the trend lines I've been talking about, the daily and the weekly time frame. And I talked about the volatility oscillator dropping, again, showing volatility collapsing. Again, when volatility is on the rise, we'll see the volatility oscillator surge. But I talked about the similarities here between over here, how, again, we got that downturn just before the S&P peaked, and then the January peak, and volatility began to rise back above the signal line, and we saw the S&P trend change at that point, forming this divergence. And I also told you at that time that I thought we'd turn back up here with the S&P trend direction to better define this divergence, and again get another push up to the target levels I've been talking about. So again, it's nearly done here. Is what I think is going to happen is I think we'll see a peak that will push volatility back above the signal line, eventually breaking this trend line, confirming a reversal, and then again I think we'll see the trend direction begin to turn back down and go negative, just like what we had back over here. And this, when this happens, that will validate a reversal, but it's got to remain that way. And then we got to see the S&P drop below the 10-month moving average, drop below the 20-week moving average, and we got to see some real confirmation here. It's not just a pullback, but a major reversal. So just something I'm watching. And again, so it's played out as I told you it would 3 weeks ago. We've gotten the rally back up, which has given us this larger divergence and has given us a downturn in volatility. I think that it's about done. I think we're going to go a little bit higher into that mid to high 6,100 area. So I wanted to give you an update on that because, again, this is going to tell me when the next turn in the market happens. At the 2022 top, again, volatility began to rise above the signal line, and we moved into the negative territory with the S&P trend direction. It marked the turn right after the peak. This will confirm it after the market peaks. Those conditions have to remain, and we got to see drop below the 20-week moving average, the drop below the 10-month moving average on the S&P 500. I think the S&P is going to go a little bit higher, finish the divergences, and then I think it's going to turn. You've got a good shot that we could see a peak in December or January. That's with the inflation data or with the Fed here in December, or maybe it pushes on into January. It did in 2022, the very beginning of January. But we've reached the objective target in the monthly time frame. I think we'll reach the target here probably in December on the weekly chart on the S&P, and then I think we could begin to turn and see the divergences in the weekly and the monthly time frame begin to play out. Well, you say, well, we're not at extreme greed, so we can't be having a top form right now. Poppycock. Reading a neutral reading of 53 on the Fear Greed Index, doing what it's done at all the other tops that we formed during 2024. Peak in the market there, late March and on April 1st there, formed a divergence with the S&P 500. We also saw the same thing happen at the July peak for the S&P 500. Doing the same thing right now. Seeing these divergences at these tops. We saw the same thing back in 2022. We've got a neutral reading right now on the Fear Greed Index. Yet if you look at the S&P here in red, here's the Fear Greed Index in blue. The S&P is making new highs. The Fear Greed Index is not. Again, here is a July peak right here with the S&P. Right before the July sell-off, we did the same thing at lower levels. We did it over here at higher levels. Back over here, we peaked there at the very end of March, or I think it was April 1st actually, for the S&P 500 right there. The 2022 top, the January 2022 top, we did the same thing. We had a lower high on the Fear Greed Index, and the S&P in red there made its final peak, verging with the Fear Greed Index. So we've seen these divergences over and over again. I don't think it's done. I think we're going to go a little bit higher on the S&P 500, but I think it's about to complete here. But just a sentiment seems to be diverging with the S&P 500, with the AAII sentiment survey and with the investors' intelligence. And again, those can still move to an extreme. Now they have a divergence, but I'm just pointing out that the Greed Index has also made these divergences with the S&P 500 at these 2024 peaks, July and right after the first quarter there in 2024, and also in 2022. The S&P will probably go a little higher, and we'll probably see this turn back up, probably getting another reference point here of a divergence, but I think we go just a little bit higher. I'm looking at the target level in the weekly time frame, that upper channel line I've been talking about. Things to be paying attention to. Now, my last update, I covered the jobs report. Continue to see deterioration in the labor market, and that's signaling that recession is getting ready to happen. It's right around the corner. Nobody thinks that. Everybody thinks that we're going to have this soft landing. Even the Fed telling us, oh no, we're going to have this soft landing. Not, and it's going to be realized. And in the first quarter, we're likely going to see recession hit. It might be the second quarter. The SOM rule was triggered in July. 9 months would be April. SOM rule's accurate, and again, we know the SOM rule is triggered right before the recession hits. It's been 5 months right now. Likely not going to be too much longer before that hits. Now, we aren't going to get the inflation data next week. We had the jobs report. I went through that in the last update. We got a really strong fake number out of the Labor Department. Non-farm payrolls, again, likely going to be revised downward later. Nobody's looking. Next week, we're going to get the inflation data. Now, again, I'm telling you, the inflation data is eventually going up here. 2007, when the recession hit, inflation still began to climb. Eventually, the deflationary forces brought it back down. What's going to happen here, Fed still cut, even though inflation was sharply rising, as we had moved into recession. They were blindsided back then by that recession as well in December of 2007. Why they did the emergency cut in January of 2008, which you're going to see in all likelihood in this first quarter. You're going to see the market peak out and drop about 20%. The Fed will do an emergency cut, play 3/4 of a point. Now the narrative, Fed is going to cut in December and then they're going to pause. But if we begin to see the inflation data pick up with the inflation reports next week, with the consumer price index on Wednesday and the producer price index, consumer price index and producer price index, wholesale inflation, could see the market begin to react to that in a negative way, initially saying, well, we're going to get less cuts out of the Fed. The market's craving these rate cuts. The herd believes that the rate cuts are bullish. The rate cuts are really bearish. Go watch the video that I just made. Showed you that. Next week we'll get the CPI data on Wednesday the 11th. The over a month is supposed to be 0.3 for the headline number. The is also supposed to be 0.3%. The year over year is supposed to be 2.7. It came in last month at 2.6, so it's supposed to tick up a little bit. Core is supposed to drop a little bit at 3.2%. Previously, it came in at 3.3%. But these numbers are expected to start to rise. Some economists are saying that they're raising their expectations for inflation to increase, expecting tariffs to do that. Now, we'd had the tariffs before the Trump, the first term of the Trump administration. They really didn't do anything in regards to inflation. Get the inflation until the economies were shut down with the pandemic, supply chain disruptions. The government decided to pass out $6 trillion in checks. The Fed gave us QE 2.0. That gave us the inflation. I don't know. Economists are raising expectations based on the presidential election. Whether that happens or not, we'll see as far as tariffs are concerned. Again, the CPI is going to go up. In 2007, the recession hit. The CPI inflation rose sharply. It's still cut. So I want to continue to point out the narrative is going to be, and the narrative on social media already with the strong number, the strong fake number we got with the jobs report. It's going to do one more cut and they're going to pause. And if we start seeing inflation tick back up, narrative is going to be we're going to get less rate cuts. I've talked about this narrative for a long time. It's wrong. We are going to get the rate cuts, but because the recession is about to hit, it could be a catalyst because, again, Herb believes that the rate cuts are bullish. They are not. They are bearish. Pay attention. Next Wednesday and Thursday, we're going to get that inflation data. Will it spike up this time around and end up triggering us off? We'll see. I want you to know in the coming months ahead, and maybe with this report, I do expect inflation to begin to sharply increase. Now, the following week on the 18th, we'll get the FOMC rate decision. Again, the Fed is expected at this point to cut another 0.25%. Powell's press conference. Again, last week, Powell doubled down on there's no hurry to cut. When the recession shows up, the Fed will finally figure out the economy is slowing. And the economy is slowing right now, but, the Fed is like Mr. Magoo. They can't see what's right in front of them. Stumbling and bumbling around Mr. Magoo. If you don't know who Mr. Magoo is, ask your parents. He was a cartoon character, had bad vision, and used to get into all kinds of trouble because he couldn't see what was right in front of him. And that's where we're at with the Fed. They can't see what's right in front of them. Please support the channel with the link directly below that allows me to be able to provide you this information. If you like the charts and indicators, please let me know that by supporting the channel. I don't have any sponsors, just a direct relationship with you. I just ask that you do what you can to help out. If you could take a moment to do that, I would really, really appreciate it. Just follow the link below to take you to a secured site, and you can donate any amount you want or make it a recurring donation. If you do that, I thank you. But if you could take a moment to partner with me, I would really appreciate that. Thank you for your consideration for that. I'm going to try to go through these quickly. In this video, I want to show you market sentiment right now, and I want to show you the Fear Greed Index. So some important charts I haven't shown you in a little while. I want to go over those. Try to show you different stuff. One thing I'm watching is this upper boundary right here on the S&P 500. We're slamming into it. This is the trend line from the July peak right here to the peak, the presidential election results, the rally there, Fed meeting. That gave us the peak and the pullback to the 20-period moving average and gap support. We rebounded. I told you I thought we'd go to new all-time highs still. That happened. And we're stowing at this trend line right now. Now, if we get above it, we have this upper boundary right here from these highs over here, connected to the peak here, connected to the peak here with the election rally there. So again, going to be looking at these trend lines right here. The dotted one, I included the shadow. The black one excludes the shadow. And it's very possible that if we see the inflation data tick up with the CPI or the PPI next week, that we could see the market peak out, or with the Fed in about a week and a half from now, the 18th. So we'll be watching. You got a pretty good shot of a December or January peak. And again, with those divergences hovering over the weekly chart, if we go a little bit higher, we're going to be slamming into some of these target levels, like this upper boundary here on the rising wedge. But we are hitting this trend line from the July peak, so I'm going to continue to point that out. Will we stall right there, that trend line, or go to the next trend line up there? Continuing to watch the MACD. It's got a potential divergence right here, and RSI has been flirting with the areas here that we reached over here. Now, does it get a solid push above 70 and go to a new extreme? That's what I'm going to be watching right here. Momentum did move to a new extreme here. And again, I'm watching this upper Bollinger Band here. We're stalling at this trend line, but directly above it, we've got the upper Bollinger Band. We did push above it by just under a point previously and got a red bar the next day on Thursday. And then we had an update on Friday. Going to be watching this upper black trend line here very closely. Turn off that red trend line there. Now, I've been talking about the monthly trend line. We hit the trend line, the upper end of it, including the shadow from the 2000 top, connecting 1929 to the 2000 top, slammed right into that 1 week ago on Black Friday. Okay, and we've now inched above it. We hit it the last day of the month. And then on the new month, now we're inching above it just ever so slightly, moving towards that weekly trend line that I've been talking about. But again, I believe that a major top is going to form surrounding this trend line right here. I told you I thought we'd overthrow it and hit the 6100 area. We came to just under 6100 there on Friday. If I bring it up close, you can see we're overthrowing it here just a bit as we started the new month. We tagged it right there on the last day of November on Black Friday there. We moved into the month of December, and now we're overthrowing it just a little bit. I told you that I thought we would end up overthrowing it, but the further right you go to the chart, the higher up the trend line goes. Even though we went a little bit higher after tagging at the last day of November, again, we're still moving towards that 6100 area. We're just directly under it right now. I think we're going to go just a little bit higher, and then I'll be looking at what kind of candle forms by the end of the month. Do we get a reversal? Are we reversing off of this trend line after overthrowing it before December ends? I'll be watching to see what kind of candle we get. Again, we could be completing the blow off top here. Begin to see the divergences in the weekly and the monthly time frame begin to play out. We've got this channel on the S&P 500. Again, it looks like we're just directly below it here. So looking at this trend line here from the previous peaks earlier in the year, going to be watching this upper channel. Again, move us into the mid to high 6100 area to come up to this area. If we move to that other upper boundary of the rising wedge. Right now we're stowing at that other trend line in the daily time frame from the July peak. So just a channel that I'm watching. Again, we still have these multiple point divergences all over the place on the S&P, likely getting one here in the more recent price action here. And when this is done, begin to see these divergences play out. Remember, we just reached my target level last Friday. The previous Friday, I should say, a Black Friday. Just a week ago. Now I'm watching the upper boundary of the channel here on the weekly. These divergences just everywhere. So I think we're going to go just a little bit higher into the 6100 area, but then I think we're going to turn, and I think we'll see a peak and we'll get a reversal. We've got this big divergence with the NAAIM exposure index. I told you these divergences under construction until we reach that 6100 area. That's what I think is happening. Again, remember, we just hit that mid 6000 area just a week ago. And I told you I thought we'd overthrow it, go into the 6100 level and hit the upper boundary here in the weekly time frame. But again, a lot of these divergences, a lot of different indicators. Here it is on the NAAIM exposure index, what active money managers are doing. And again, diverging from the July peak. And we've got it on the RSI, we've got it on the MACD. And again, if we just zoom out, here's the divergence we have on the RSI right now. We had a lower high there at the high peak in the weekly time frame. There's a 2022 top right here. And again, notice these little rising wedge patterns. This is a bigger one right here. And then we have the one in the daily time frame that doesn't go as far back from here. We have the trend line again from July connecting this peak right here and this peak right here. So do keep that in mind, which is right below this upper boundary of the parallel channel. Again, back over here in 2020, these divergences led to major sell-offs. This one is triple divergence. It's likely going to lead to a major reversal and stock market top near that monthly trend line. Nearly 100-year-old trend line in the monthly time frame I've been talking about. And then I've talked about this trend line from the 2023 low, and again, acted as support with the pullback here. And then we broke it, and it's been acting as resistance over and over and over. Again, if we go a little bit higher, hit the trend line in the weekly time frame and the upper boundary of the rising wedge on the daily chart, you can slam right into that level again. And again, that 6100 area. So again, just a trend line of interest. Again, very similar divergence that we had over here. Very similar multiple point divergence that we've now formed over here. Very similar on the MACD as well. So again, going to be watching that. And again, getting above, if we get back above that upper Bollinger Band, Nasdaq's above it right now. S&P had dropped back below it, still below it, just slightly. Now, rising wedge on the S&P 500, and we breached the trend line, and then we got back above it, moved slightly higher, forming this little miniature divergence right here. Again, that could give a pullback or reversal around the trend line on the daily chart, that July trend line I've been talking about that we just slammed into. Again, this could evolve into a bigger divergence, or even we could come down. We could come down further, and then it could evolve into a bigger divergence still. So just keep that in mind, or we can get it immediately sooner rather than later, and then get a inflation sell-off if the inflation data ticks up. Again, I do expect the inflation data is going to go higher. Eventually, I think that the market be troubled by that. It's still going to go higher, and the Fed is still going to cut rates. We start seeing the inflation data go higher, and it may be this week. Conventional wisdom is going to be, oh, the Fed is not going to be able to cut rates as much now. Again, we're going to have a recession hit. They'll realize it after it's too late, and then they'll begin to do the jumbo cuts. It's just like 2007 all over again. So I'm watching this little divergence right here on the 60-minute chart and on the MACD. Does it go into negative territory, or again, do we just get a pullback here and we're kind of going sideways? That resistance directly overhead in the weekly and the daily time frame. Now, I'm watching the Dow very closely. It is still diverging with this peak that we had in late 2021 with the transports. The transports had a big push down there on the weekly chart right here, and the Dow was down just a bit. But the Dow upper end of the channel and diverging with the transports is something we're paying attention to. This multi-year divergence that is still developing. Dow in the daily time frame, I have this channel parallel to the lower boundary here, excluding the shadow here. We tagged this area, or just came shy of it there, and closed below the 10 period on Friday, watching this little tiny divergence that developed on the Dow. The Dow's at the upper end of this channel. We've got this multiple point divergence and a nice looking divergence here on oscillators. So again, going to be watching to see if we start seeing these divergences play out with the inflation data next week, or maybe with the Fed. But again, good shot. These divergences are going to play out in December. Nice looking channel here on the Dow. Russell was up 0.35%. Again, nice looking channel here on the Russell. I've got a trend line from these highs and a trend line going back to this peak over here. Nice parallel channel there, and we've seen the MACD roll over. We have these divergences on the Russell that have given us a sell-off. I'll be watching to see if we go back to try to flirt with the trend line, or if this peak holds. The S&P has made a new high. The Russell has not. Worth paying attention to these divergences as well. And the blue trend line going further back here is the upper boundary in the weekly time frame. You can see that right here. And again, we got that doji the previous week and turning down on the Russell this week by 1.22%. The Russell down off of this channel line. So something we're paying attention to. It's got the negative divergence as well. Again, if it starts going below 50, then it could confirm a reversal. By the time that happens, we could see a significant sell-off. The divergence could be marking a turning point here. Right now, Nvidia, and I talk about Nvidia because the Nasdaq follows Nvidia and the market is following the Nasdaq. Nvidia, I told you I thought we'd get a head and shoulders here and kind of straddle along this trend line here and again go up to this 144 to 148 area. So far we're doing that. So I'm watching to see if we develop a right shoulder. Do we stop making new highs? We had the divergence surrounding earnings. We went up, hit the upper boundary and reversed, dropped 14%, rebounded back up. I told you I thought we'd rebound back up off this horizontal support and this rising trend line where they intersect, and we did. And I told you I thought we'd get a right shoulder. And again, that the Nasdaq and Nvidia would begin to diverge. And so far that has happened. A huge red flag. Now, if we end up getting the right shoulder and we go back and break the channel line in the weekly time frame, it will confirm a major reversal for Nvidia. The long-term trend line that I've been talking about, it was down 1.81% on Friday. This is the most important trend line in the stock market. If it breaks, this is a weekly chart on Nvidia. If it breaks and you take out the 20-week moving average, that'll likely terminate the bull market for the Nasdaq and the S&P 500. Now, we could still go up to the upper boundary of the trend line, long-term trend line, not this one, but the long-term one that we just turned off of right here. I think you're likely setting up a head and shoulders, and I think that will eventually cause us to break. But even if we go back up and test this trend line, we would be slamming into that longer-term trend line one more time. You've got this ugly-looking divergence on the MACD and a triple divergence here forming, of which, again, terminate the AI rally with semiconductors and for the stock market. Now, the channel you just saw is this channel right here. This is the long-term channel. All the data that we have for Nvidia, again, it turned off of this trend line in June. It turned off of it again here with our recent highs surrounding earnings. If we break this trend line, it will confirm a reversal off of this long-term channel, and I think it will terminate the bull market. Nvidia has been leading the AI rally. That is terminated. It will terminate the bull market. So again, I'm watching the trend line up here for where price stalled, and I'm watching the trend line right here. We break it, it confirms a reversal off that major trend line. This is the most important trend line in the stock market right now. Head and shoulders breaks down and we break the channel, it will confirm a reversal off the longer term upper boundary here with Nvidia. Now we have Nasdaq going to new highs. Nvidia is making a lower high. So that's a huge red flag. That's what happened back over at the July peak. Nasdaq moved to a new peak in July. Nvidia made a lower high. Lower high right here in July below the June peak. They diverged. They could be doing it again here. Led to a big sell-off for the Nasdaq and for Nvidia. We're overthrowing this upper boundary ever so slightly again. This upper boundary, the rising wedge. I told you sometimes you get overthrows. Again, I'll be watching to see what happens here. S&P stalling at the trend line from the July peak. Nasdaq's already overthrown that level earlier this week. Again, we're seeing the RSI move higher. Could just reach an extreme, or we may see a divergence develop. Same thing with the MACD. Right now, you got a possible Class B divergence, but the MACD still may move higher. Just some things to be paying attention to. Told you I thought Nasdaq diverge with Nvidia. If we can move towards this trend line right here, we've done that now. So again, there's that divergence present. We're moving above the upper Bollinger Band, and here with momentum, you have a divergence developing as well. So again, we'll be watching. Again, we are pushing above the upper band. The S&P is not there. It was there by just under a point, and then it dropped back down. Nasdaq's back above it. S&P is not yet there. Here on the 60-minute chart, we've got this divergence. Had a little divergence here, pulled back, and then came up here, got another larger divergence. Again, do we see some kind of pullback and then a rally and a larger divergence develop, or do we see Nasdaq peak ahead of the S&P and they diverge? They still end up diverging, and we ended up getting a lower high. And this divergence marks a turning point here for Nasdaq, and it ends up setting up a lower high, diverging with the S&P 500. That often happens at turning points. Some different ways it could play out here, but again, overthrowing that upper boundary of the rising wedge on the daily chart. We have a little rising wedge right here with this divergence on the 60-minute chart. So I'll be watching to see what happens ahead of the CPI data this week, and with the CPI, what happens here on these 60-minute charts. Nasdaq does go higher. We're overthrowing this upper boundary, which is parallel to this lower boundary here. We're overthrowing it slightly. Have another channel here, the blue trend line, and this trend line right here, and that would take us up just a little bit higher to this trend line. So just some different trend lines I'm looking at. We still have the divergence right here, and on the MACD down here. So again, it's all over the place on the price oscillator, and it's just everywhere, the money flow, everything. Nasdaq had a good week, up 3.31%. So again, I'm watching this trend line as we have overthrown this one, this larger channel, and then we're watching also a very similar channel on the S&P 500. So just a trend line I'm paying attention to. Right now, sentiment is through the roof. Sentiment is so bullish, it's bearish. As we're approaching interesting trend lines in the weekly time frame on Nasdaq and S&P, hit our target last Friday, the previous Friday on Black Friday. A monthly chart for the S&P, I told you I thought we'd overthrow it and go into the 6,100 range. We'll likely do that next week to just under 6,100. But look at where the sentiment is. On the AAII sentiment survey, we have a reading of 48.3 for the percentage of bulls. To get these high 40 readings, like 48 here, and the 50 readings, tend to mark peaks in investor sentiment. They can remain there for a little while. We've had a couple of 40 readings in here, dropped a little bit back down, but you start getting these higher readings. Now, what's interesting with sentiment, and just like the fear greed index, the sentiment is diverging with the stock market. The S&P's made new highs. Sentiment is making a lower high. It's pretty interesting. This is the AAII sentiment survey. This is sentiment among individual investors. You got 30%, 30.7% bearish, 48.3% bullish. AAII sentiment survey is not as high down here in the lower window in blue. It's not as high as it was back over here in July, or the August peak, or the October peak, and the peaks that followed, but it is diverging. It is diverging with the S&P 500, which is very interesting. Blue is a percentage of bulls. The AAII sentiment survey. It's something very similar at the 2022 top for the S&P 500. It diverged, and then it diverged again between November and as we are moving into the new year. It diverged again. Very, very similar to what we have right now. Similar divergence that's forming with the fear greed index. So this is the Investors Intelligence sentiment survey. The survey's advisory newsletters, and again, look at this. Look at the percent of bulls, 62.9%. Very, very high reading in these 60. When you get into the 50s and 60s, here we are at extreme, 62.9. The percentage of bears is only 16%. Look at what's going on, though. We're diverging from the peak made earlier in the year. The S&P's moved above the July peak. Sentiment right now is making a lower high. It's diverging. Bearish sentiment is making a higher low. Now, if you look at the percentage of bulls back in 2022, there was a divergence present then also. It's interesting. Sentiment is through the roof right now. 62.9% here, percent of bulls diverging. You know, not only did we have that in 2022, we had it 2018 when we dropped 20%. We also had it 2015 and 16, about 17% there. Before the pandemic hit, we were right here, just right under 60. Extreme readings, often associated with reversals as far as corrections, major peaks. Sentiment is through the roof right now, and point I'm trying to make.